Hey, welcome back. Bitcoin is sitting at $70,734 here in 2026, about 44% below the all-time high of $126,000 we hit in late 2025. And depending on how you're looking at this market right now, that either feels like a disaster or it feels like exactly the kind of environment where the best opportunities tend to show up quietly. The fear and greed index just came in at 18, extreme fear. That's about as low as this thing gets without a full market collapse. And every time I see a reading like that, I try to ask the same question. Is the fear justified by the data, or is the crowd just reacting emotionally to price going down? Because those are two very different situations. And the answer to that question is basically what this whole video is about. We're going to go through the charts, what's actually happening on chain, what institutions are doing with their money right now, and what the macro backdrop looks like. And then I'll tell you exactly how I'm positioned and why. So let's get into it. And now let's start with the charts. And I want to be upfront about both sides of what they are showing because there are real bearish signals here that I'm not going to gloss over. On a daily chart, the 200 EMA is sitting at $89,562. Bitcoin right now is trading about 21% below it. When you're that far below the 200 EMA on the daily, the trend on that time frame is still pointed down. That level isn't acting as support, it's overhead resistance. Any real recovery is going to have to work through 89k eventually, and that's not going to happen in a week. That's the honest read on the daily. Now zoom out to the weekly chart, and this is where the story gets genuinely interesting. The 200 EMA on the weekly is sitting at $68,336. Bitcoin is at 70k. That means we are $2,400, about 3% above of the most historically significant levels on Bitcoin's entire chart. Every major cycle has treated the weekly 200 EMA as a critical line. When Bitcoin has lost it and then reclaimed it, those moments have marked some of the most important turning points in the market's history. Right now we're holding it by a narrow margin, but holding. So you've got two time frames telling two completely different stories. The daily trend is down, the weekly 200 EMA is being defended. Both of those things are true in the same time. That kind of tension between time frames is usually pretty common at major decision points in the market, and that's exactly where we are. Weekly RSI isn't flashing any kind of overheated reading either. We're sitting in a range that lines up with mid-cycle positioning, nowhere near where you would expect to see a local or macro top. And here's one more technical detail worth flagging. Between 72k and 80k, only about 1% of circulating Bitcoin supply last changed hands. Analysts call that an air pocket. Very little historical overhead resistance in that zone. If Bitcoin can clear 72k convincingly, there's not much standing between it and 80k from a supply perspective. That's the potential upside if the weekly level holds. But here's what most people are missing. The chart alone doesn't tell you the full story. Let me show you what's happening underneath it. If you're looking to actually trade any of these setups, I use BitUnix. Clean interface, good liquidity, doesn't get in the way when you need to execute. Link is in the description down below, by the way. Now, fear and greed index at 18. The average person in this market right now is genuinely scared, sitting on the sidelines already sold, or watching their portfolio with one hand on the exit button. And look, extreme fear isn't automatically a buy signal. Markets can stay fearful and keep drifting lower. You can't just point at a low reading and call it a bottom. But when you layer the sentiment data on top of what institutions are actually doing with real money, that's where it gets interesting. Spot Bitcoin ETFs just posted $462 million in inflows in a single day. That's the third consecutive day of positive flows, bringing the weekly total to $1.1 billion. BlackRock's iBeat alone pulled in $307 million of that single day number. Think about what that split looks like. Retail sentiment is at an 18, and the biggest institutional players in the market are quietly moving in the other direction. That's not a small thing. Historically, this kind of positioning divergences tend to resolve in the direction the larger capital is flowing, not in the direction of retail panic. Funding rates are worth mentioning too. Right now, they're flat to slightly negative, meaning the market isn't loaded up with over-leveraged longs waiting to get liquidated and drag price down with them. That's actually a cleaner setup for a move higher than most people realize. Now, watching this, because the sentiment picture connects directly to what's happening on chain, the NVRV score is sitting at around 0.49 right now. Just to put that in context, the cycle top we saw in late 2025 had readings above 7. The formal green accumulation zone that marks deep cycle lows is near 0 or negative. At 0.49, we're neutral to low. Not screaming cheap, but nowhere near the kind kind of stretch reading you see at the market top. The Sharpie ratio on a 365-day basis is deeply negative. What it tells you is that the drawdown from the all-time high has been real and it's been painful for anyone who's been holding. It also means that there's significant amount of room for that picture to improve if we are approaching a turning point. On-chain data also shows over 400,000 Bitcoin were accumulated in the 60 to 70k range during this pullback. That's a meaningful support base sitting right around and just below the weekly 200 EMA. The people who understand that level have been defending it with real capital. Now, there's one piece of news this week that's directly relevant here. CleanSpark, one of the bigger publicly listed Bitcoin miners, sold most of their February production, 553 Bitcoin for about 36.6 million. That is real sell pressure entering the market and worth acknowledging. But they still hold over 13,000 Bitcoin in their treasury, and this looks like operational cash flow management to fund their Texas expansion, not panic selling. And when you put $36 million of miner sales next to the 1.1 billion in weekly ETF inflows, that supply gets absorbed without even registering. If you're thinking about sizing into any of these levels, Bitunix is what I use for execution. Simple to set up, sold for managing entries when you have an actual plan behind the trade. Link is in the description, by the way. Now, let's zoom all the way out because the macro picture right now is worth understanding properly. The DXY, the US dollar index, is sitting around 98 to 99 at multi-week highs. The main driver isn't Fed this time. It's the US-Iran military situation that's been developing, pushing oil prices higher and sending investors toward the dollar as a safe haven. The first Fed rate cut is still fully priced in for July 2026. That part of the picture hasn't meaningfully shifted. Now, Bitcoin and the dollar have historically had an inverse relationship. Strong dollar risk, assets under pressure. That's been a real headwind, but there's the thing about geopolitical safe haven demand. It tends to be temporary. Once the immediate uncertainty cools, that premium tends to come out of the dollar, and risk assets typically catch a bid when it does. Not a guaranteed, but a pattern worth tracking. Gold is also running to new highs right now while Bitcoin sits in a fear pocket. I'd actually frame that as a part of the same story. Capital rotating towards store of value assets, with gold going first because it carries less short-term volatility. Bitcoin historically follows that rotation with a lag. One more thing worth addressing directly, PSA Quantum just broke ground on a quantum computing facility designed to hold 1 million qubits. Some headlines are framing this as a potential threat to Bitcoin's encryption. My honest take, it's a real long-term development worth staying aware of, but the Bitcoin development community has been working on post-quantum cryptography upgrades for years, and PSA Quantum own co-founder has publicly said they have no plans to use the technology against Bitcoin. This is a background item to monitor over years, not something that changes your positioning today. This is where it all connects, because when you put the macro picture together with the on-chain data and what's happening with ETF flows, the fear in the market doesn't match the underlying fundamentals, and the gap tends to close eventually. Before I get into my own positioning, if you want proper tools for execution, Bitunix is linked in the description. I've been using it and it does exactly what you need it to do. So here's where I actually am with this. I've been adding gradually into this range, not all at once. I'm not trying to nail the exact bottom because that's not a game worth playing. A combination of extreme fear at 18, 1.1 billion in weekly ETF inflows, the weekly 200 EMA being defended at $68,336, 400,000 Bitcoin accumulated just below us, and the air pocket above 72k all the way to 80k. That's enough of a case for me to building a position slowly and deliberately. Base case, the weekly 200 EMA at 68,000 holds. We consolidate here, and over the coming weeks, we work back towards 72k and through the air pocket toward 80k. Risk case, a weekly close below 68,000. That's not a just support level breaking, a structurally significant event with real historical weight behind it. If that happens, I reduce exposure, keep dry powder, and wait for more clarity before adding again. I'm keeping some cash available either way. That's not a lack of conviction. It's what lets you stay in the game if the risk case plays out. The macro noise is real, but I'm not trading it. The Iran situation creates short-term volatility. It doesn't change where we are in the Bitcoin cycle or what the on-chain data is telling us. We'll track this week by week, same as always. If you're seeing something different in the charts or the data, drop it in the comments. I'm genuinely interested in what you're looking at. See you in the next one.